To another video. It's Emmanuel, and I'm here to start your Forex training proper. Please have an open mind when learning, especially for those that have one or two basic knowledge about Forex. You have one or two knowledge with what you're about to learn from here, you can add it to your arsenal to be successful. The goal is for everyone to be independent than being dependent on an educator, a signal provider, and the rest. So that you also can take your signals yourself, generate signals, and take your profits on your own with the right knowledge and softwares. So let's begin. Forex market, as we know, is the largest financial market that generates $7.5 trillion daily. Can confirm the stats. So basic things you need to know about this. We have the global trading sections. We have global trading sections for Forex. Now some may tell you we have three, some may tell you we have four, but indeed we have five. Though it's four people normally talk about, but we have five. The first one which people don't really talk about is the Germany section or the Frankfurt section, which is from 7 a.m. to 4 p.m. Now this GMT is like normal GMT. Like we now in Nigeria, this section starts from 8 a.m. to 5 p.m. because Nigeria is GMT plus one or UTC plus one. So depending on where you are, that is what you return. Like if you're in Australia now, I think you people, it's not, correct me if I'm wrong, but it's supposed to be GMT plus 8 or plus 9. So you add it to this, that is, this section starts between 3 p.m. to 5 p.m. then ends 9 hours after. That is it. The London section, which is the 8 a.m. to 5 p.m. Those in UK, and this is your time zone, so you won't have a problem. New York, 1 p.m. to 10, Sydney, 10 to 7 a.m., Tokyo, which is one of the most traded sections, 12 a.m. to 9 a.m. So next one now is key characteristics. We have the centralized, the high liquidity, and the leverage. The centralized, as we know, is non-central exchange like OTC network, counterparty risks with brokers, because it's broker we use to trade the market. Then we have high liquidity, instant execution for standard sizes, slippage, risk implication like slippage during news or event like the NFP, the CPI. Don't bother. We still talk about what all those means later in the video. The leverage, which means control large positions with small capital. And please let me sound this one in, okay, because I wrote it here. Depending on the leverage you are using, it can give you crazy profits, even with the, yes, which is the popular lot size, which is the 0.01, can give you big profits, but also can be your downfall because it can amplify losses. If you're opening four positions at the same time, you're in profit. You can also earn $10 because you have opened four positions, you're earning $40. If that goes against you, that plus 40 can also turn to minus 40. So please be careful, except you are following an instruction of an expert or pro trader. Instruments of the empire, which is like what we trade mostly in Forex. Major pairs, which is the Euro USD, GBP USD, USD JPY, pips calculation, fourth from fourth decimal. We show you like what I mean. Cross pairs, Euro GBP, yes, GBP which is euros pounds, or JPY Australian dollars versus the pairing with the Japanese yen. And I need to tell you one thing about pips. Okay, pips should be down, but let me just show you pips calculation. What we mean by pips calculation. This is BTC USD, and the pips in total in general means the movement of the market, whether it's buying or selling. Now, this is the daily time frame, and you can see the daily time frame opened at started today at when it was $73,096 per BTC, and it came down. Currently, it's at 71,430, and it has done about 2,000 pips because a single pips for BTC starts before the decimal. Another way to calculate pips, this is your trading view. In the other previous video, I already told you how to get here. Press this ruler. You don't see it here, you double tap it. Okay. This other arrow is not showing. Where you press here, you can see it has done 1,818 pips currently. But let's go to something like Euro USD. Oh yeah, okay, let me use this. This is the daily time frame. You can see price opened here 1.17009, and price closed here 1.17252. Now this is 24.4 pips. Why did I say so? Pips movement for this, like it's here, like I said in my book, pips movement for currency start from the fourth decimal place. 1, 2, 3, 4. Starts from this 5. The fifth one is what we call pipless. But why we say this one, the movement from the fourth to anywhere it is very good, because for the fifth decimal now, once you reach 1 to 10, this figure changes. Now, if he has done 1, the next price you are seeing here is 1.17263. That you have done 1 pips. But now, you see where the market opened. If market reverses from where it is now, so this 1.17009, it has done 24.4 pips. If it comes to 1.16009, let's just see somewhere like here, 009, it has done 240 pips. You understand? If it does now, for instance, now 1 11825. He has done 100 pips. But to have easy to know the pips calculation, you put it where you are measuring. Because why pips is important. This is how we measure our take profit and stop loss. So let's assume we enter the trade here. Enter the trade here. Since Wednesday, that you would have made 69 pips. I mean, if you are using size lot 1, it would have been $69.2. You can see why currency movement is slow, but this is what you would have made. So that is it for pips calculation. Cross exotic pips wider spreads higher. Please be very careful of these exotic pairs. They are highly volatile. Quick example as usual. But sorry about that. Now where you see USD TROY for instance, it's like America dollars pairing with the Turkish pair, Turkish currency. And if there's any pair you don't know or you see have seen the symbol, you just come here, type here, like we say TRY. Let it load, yes. Yes, TRY, USD, ZDR. Any pair you don't know, just go to your browser. Network shouldn't start. I want to show you why this is very should stay away because it's very okay, just okay. Let it load. It's loading. For metals, this is my favorite currency. Gold. I love trading this. Examples of metal we trade gold, trade silver. Silver is more aggressive than gold, but trade it. And you can see it's the pips calculation from the first decimal. 1 pip. Because on your MT5, you will be seeing just 2 decimals. But on TradingView, you will be seeing 3 decimals. No matter the decimal, a pip calculation is from the first decimal. That's why if you have something like, let me see whether it has, you can see why this USD try you need to stay away from it. Imagine how you did your analysis that okay, for instance now, price will reverse here if you wish here, and you put a stop loss like 100 pips, you would have hit your stop loss. Look at now how many pips this flew for. On a Thursday, this is where it closed. That is 44.57734. Now look at it. And it still closed with a doji candle. It still closed with a doji candle. It opened for the next day, opened at 44.672, which is 950 pips. If you were on a buy, you decided okay, this thing might buy. You're on a buy with a size lot 1 that made $932. But you can see how it jumps on the daily. Okay, he did this, did here, and it closed back here. Now let me tell you something about a doji candle. The doji candle shows you that, and you will be surprised that as of Monday 12 a.m., depending on the broker you are using, or 11 p.m. this Sunday night, This doji can signifies a reversal. You might see market opening here or here. You can see doji, red doji, it flew here, opened here. Over 700 pips, then started reversing here, did a T pin bar, but this is a thin pin bar with no body, indicating a continuation. And look at the buy. If market has closed like this, there is no way except you just set a buy or a buy order or a buy limit, or you enter the buy few minutes before that market close. That is the only way. Because market opens, this is where you be at. So say why this pair is risky, very risky. Please stay out of it if you can. Or if you must trade it, take what you can afford to lose. That is just a summary. Crypto market, can see why I said there's no difference between crypto and forex market, because crypto self is under forex market because it's types of things you trade. And you can see it. BTC, Ethereum. The main difference, two main difference, which I will still say it tomorrow, is that one, bit crypto market, cryptocurrency market is a 247 market. That is, they also trade during the weekend. Why indices? Okay, let me finish with the cryptocurrency. This and two, they don't have any major trading section. There is no major trading section. So that is just it. We have next the indices. We have energy, US oil, UK oil. And please, if you are trading US oil or you are following somebody that gives you US oils, you can always ask him the US oil is trading. A practical example. Let's use this one. You are seeing how much what this one is reading. 9,051. But this is like future trading, showing you this 95. This is what most people use to trade the WTI. So just be careful of things like that. So now the language of candlesticks. And Japanese candlesticks, as is written here, visualize market psychology, fear, greed, and institutional positioning. Antonym of a candle. There's a book I will recommend for you people, those that will reach out to me to have a clearer understanding of candlesticks. But the anatomy of a candle, the real body, the upper shadow, which is the upper wick, lower shadow, bullish candle or bearish candle. Practical example, let's use this one. Yes, this is an engulfing candle, but this is a daily candle. This is an engulfing candle. This is an example of a bearish candle. Now, on some trading view, this is the color red. You see, when you see red, you know it's a bearish candle. Some candle you will see white, also know it's a bearish candle. That's why those word bear. It shows that the bears, which are the sellers, are the one. Sellers and investors are the one making this market go down. Same apply for a bullish market where you see green candle, or on some trading views, or depending on your setting, might be a black candle, but this is a typical buy candle, sell candle. Now, This is what they mean. Lower shadow. This is a wick, which is the body candle formed here, silent, later retraced, came here, also retraced. So this is as far as people are concerned. The market opened at an example for this US oil at $84.98 and finally closed at the ending of the day. Yes, 84 point. Finally closed at the end of the day at $86.25. This is the main body, the upper shadow. This is the upper wick, lower shadow, lower wick. The same applies for the cell candle. That is just it. It has a long body, strong directional combination, which is here. Wow. That's why the next day when this should be on a Thursday, when he tried to buy, when he reached up, he retreated because it's on an engulfing candle. And it's rare to see an engulfing candle for daily, but it's common this period because of the work going on. So this, and you can see Friday, tried buying again and it closed. And this is what you might see. It might sell up to here, this support, here, here, or here. That is how the market is. Short body, the same thing, a doji. Okay, let me explain the doji candle. Let me see. Okay, let me just show an example. I've explained it, but let me just show you. Let's again. Yes, yes, a doji candle. This is a doji candle like I explained before. Longer wick, smaller body. This is an example of a pin bar. Continuation here is an example. Now, later today, 11 p.m., depending on the broker, or 12 a.m. Monday morning, I won't be surprised to see this market sign. That is just it. Doji candle. So now this is the terminologies. Now I can tell you on my left section, long, so price at so, take profit is stop loss this, or prepare for a buying market. Buying now means telling you to enter the market, that we are going to profit from the market at from buying for that day. As you see, let me even give you a go to BTC. You can see today we have entered the sell market earlier today. You would have been profiting and you would have made currently this is over 1,800 pips, but let's just be sure because a pip right now market is 7142. If market goes down to 71,432, he has done 1 pip downwards. Now let's see this. Okay, let's go to 1,646 pips. On a size lot 1 would have made $1,600. On a size lot 0.01 would have made $16. So that is just the summary of this. This is a sell market. So if you hear bear, that means bear stands for sellers. That means sellers are in the market and people are selling, or those investors that they can decide to sell some of their BTC to USDT or dollar, but it shows sellers are in the market and that they won't controlling market. If you are taking buy on a Tuesday, which was 7th, would have been a serious profit. This if I hear tell you bear, that means buyers are in the market, buyers are controlling the market for that day. So that's just it. So a bullish market, bearish market, like I just told you, is here. It's a bullish market. I mean, sorry, this is a bearish market. This is a bullish market. No, sorry, let's this brush. Okay. Anyway, yes, a bullish market, bullish, bearish. Anyway, no problem. But that is it. Bulls, like I said, buyers, the market are driving the price upwards, which I've already shown you. Yes, a ranging market. Yes, I simple definition here is price going up and down between a support and a resistance. Okay, let me go to a lower time frame. Show you. Okay, okay. This is an example of a ranging market. Try to explain this for one of my students today. Thank God I didn't clear it. This is it. Started here, try to break here, could not. Repetition, ranging. It's not giving you a direct movement. But it finally gave a direct movement or started moving when it broke here, bought for some time, did a normal, then try to consolidate here. I can see the power of one 15 minutes candle. Did here. Now only here 73,048. So here, this market alone. So here and continue. Alone has done about 1,800 pips. So if we wait till this market breaks either here or here, because here is an engulfing candle. And most times engulfing candles they either continue. This is trying to continue the sell, but some buyers are in the market. And if it breaks here finally, would have taken out all the buyers, all this liquidity would have gone. In analyzing price, later tissue, how to use bullish candles as support and resistance. So this is just a live example because you can see the time is running of a ranging market. A trendy market knowing the direct movement of a market. Like now, this is a sell market. A sell market. Another free indicator you can use to know the direction. Exponential moving average, EMA. Okay, EMA. For this one, EMA surface here. You can see for the minutes, 15 minutes. Let's check the 1 hour. Oh no. Once it loads, will come back, but now we know the trend of the market. This is a bearish market. And what's happening to network float? That is it for there. But yes, this is where traders direction forecast is based on analysis or tools. Okay, that's it. And this is another example of a ranging market. Another example of a ranging market. You can see this. And you can see inside of here, market started ranging again, somewhere like here. We started ranging here. We broke here, came back, broke it again. This, and market has not been able to break here. So this is the overall ranging. You can see now for days now. If you calculate this candle, this is about for about 2 months now. Let's just put it like that. 2 months or some weeks, market has been ranging, and now it started ranging again here. So you can see it, number of a ranging market. These are just basic examples of ranging markets. Trendy market. So this is the easiest way to learn from the EMA 200 free indicator to know. Right, this one shows you, this here shows you the FGG value, market cap. Oh, and you can see it shows you, okay, expect more of sales for the minute time frame and bearish time frame. This is showing you bullish now because of this support is approaching. As time goes on, I teach you people what is order block and the rest, but this is why it's showing you bullish, but now it's an order block. But it's approaching this support. For more indicator, this will reverse. So things like this help you to analyze the market faster and easier. And this is just it. And so let's continue. Other types of risk management. What happened here? Take profits. As I said, this is take profit, automatic closure at profit target. Predetermined before the entry and the rest. But what is more important is setting your stop loss, especially for beginners. Why do I tell you stop loss is important? But let's continue and show you back on that chart. Stop loss automatic closure at loss limit. That means I have $100 in my trading capital. Okay, for this trade, I want to stake $110 or $20, for instance. Market doesn't go my way. I can afford to lose $10 or $20 so that I can trade another day or another time. If the market presents an opportunity to trade, that is just it. Break even is carrying your SL to your entry or to part of the profits. That is, now you are trading without applying any risks. You can be in 10% profit now. I mean, you can be on 10%, sorry, Your profit at the moment might be $100, but you are still saying even a forecast of the market can still give you more profit. But you don't want it market to reverse and hit your Excel after seeing profit. I can say if market reverse and it reverses to, if my profit reduced to $40, it should close me at $40 profit. Now back to the chart. Okay, now you have our, let me go to the daily time frame. Let's go to the daily time frame. Let me delete this. Now let's use to the, let me delete this too. Okay, let me turn the inside to white. You can see why I said another reason why this is showing you, but it literally even came here, then bounced back, so it's not buying back. And you can see before I told you, so it was 71,443. Now 71,510. What does that tell you? That this has done 67 pips. So on this size, if you're using size lot 1, you would have made by now, yes, $67. On a 0.01, it would have made 67 cents. Now let's assume we entered here. Entered here now. Stop loss was here. Entered here. You can say take profit. Take profit is here. That if it reaches here, whether the market goes above here, it doesn't concern you. Once you reach here, it should automatically stop the trade. And that would be at you would have made at that time 2,500 pips profit. So depending on the size lot you are using, if it's 0.01, you would have made at least $25. Size lot 1, $2,500. That is for take profit. Now stop loss is this, enter here, but and put it somewhere here. What does this tell you? That if market comes down and goes below this, it should stop me before it goes below this. That is what stop loss means. That is just what stop loss means. Now break even is, okay, market is buying now. Let me go use 5 minutes for this. Market is buying now. You entered here, market is buying now. You can set your break even here. That if market reverses to where my cursor is, it should close me out of the market and give me my small profit. That is what break even is. In my community, I normally show people how to set it and drop video when I'm setting my break even, or on live section. So that is just it. I already talked about pips movement, how to calculate it. So we're not going to talk about this more again. Yes, the survival approach. Effective leverage is total position size divided by account equity, which I've already told you. I wish I do more examples during my live sections or one-on-one mentorship. Professional standard never use, but this is strictly for beginners on 10:1. Me as a pro trader and I know the direction of the market and I want to capitalize on the market move, sometimes I use 1:1000, 1:2000. But for beginners, please don't use this. Don't use that, use this. You can see the market calculations and the rest. And one thing about margin, if it goes below the margin it gives you, but depending on your capital, it automatically closes the trade. That's why sometimes you may wonder, instead set a stop loss for somewhere, and as you reach the stop loss, the trade close because of margin. So just be careful. So you need to, before you can become a successful trader, you need to know the kind of trader you want to be. Like me, depending on the market, I'm a scalper, day trader, swing trader. I'm not a position trader. I've never held trades for weeks or months. And what do they mean by scalper? Seconds to minutes. Just the way binary option tell you, you hold the trade, the next 15 minutes it will buy. I don't even need to wait for 15 minutes because sometimes, let me give you an example. Let me give you an example. I'm a scalper. Once I see a sell, I can use like size lot 1 now and hold the trade for 5 minutes. You can see for 5 minutes, this is a Barbosa candle. I will talk about it in the next slide. Showing a continuation. That's why this continuation happened. Following was an engulfing candle, and you can see break of structure, showing you that the sell will continue. But as a scalper, I can hold the trade for just 5 minutes or 1 minute. I'm okay with that profit. That is scalper. A day trader is simple. Right now, let's assume we entered sell today. Before this market closes, that is in the next 10 hours, 30 minutes, you would have closed your market with whatever profit you are seeing. Those are how these traders operate. Then we have the swing traders and position traders. The only difference between these two is a swing trader, a position trader are those that started holding trade from last year because they want BTC to sell up to 40,000. They don't care the swap fees that are going to pay. This is it. Some traders held this trade since here, and it even came out 125 or so. They started holding the trade from here since last year, and they received a mega profit if they are close here. Some said they will close at 60, and if the TP was 60,000, let me just show you an insight of what they would have made. Let's assume they entered yeah, 60, 60. They would have made um 64,000 pips. I don't need to tell you the calculation again. On a 0.01, you would have made $646. On a 0.1, 6,400 and $6,468. On a size dot one, $64,685. These are what we call patient traders. Most of them, they don't even put stop loss. They will just put an amount on their account with like $10,000, open size lot 1 or 0.5, allow it to run. These are some. So this is the only thing difference, like I said, between a position trader and a swing trader is to make sure they are ready to hold a trade. Swing trader can say, okay, let me hold it for a week or a month. Close. Position trader can hold this trade. He reaches his desired position or the number of months he wants to hold it. So that is just it. And with this, we come to the end of Module 1. And please take note of this. Let me even highlight it. Most traders fail because they scalp with swing traders' risk management. And the way market is now currently, even me, when I want to scalp, I even add SL now. Because scalpers, we don't really add SL. When it's in profit, we that close, even if it's $3 profit, or we set break even to allow it to go. Some of my students or clients, if they watch my video, they know how I trade already, and they can testify with what I'm saying. So if you are a scalper, don't use the swing trader analysis to scalp. You will blow your account. Match your risk per trade to your holding period. Shorter time frames require tighter stops and smaller position sizing, which is just the truth. So with this, we come to the end of Module 1. Stay tuned for Module 2, which is our next video, and which will be the Empire Supernavi. Have a blessed day, and please reach out if you have any question.